The British currency is sensitive to any Brexit turnaround. In the coming days, the pound rate will therefore depend on Boris Johnson. Pound investors will have to prepare for turbulence again this week. In Brussels, the free trade talks between Great Britain and the EU are entering what may be the decisive round. If there is no convergence again, fear of a disorderly Brexit will rise and push the rate of the British currency down. Conversely, things could go up if an agreement emerges. For 4 years now, the pound has been primarily a Brexit barometer. Things picked up slightly on Friday after Prime Minister Boris Johnson's chief advisor and communications chief unexpectedly announced their resignation. The departure of the two Brexit hardliners can only be positive from an investor's point of view. However, observers doubt that Johnson's negotiating position will change significantly as a result of the personnel change. Therefore, the market reaction will remain limited. The same applies to the election of Joe Biden as US President. This is also a positive factor in the Brexit negotiations because a deal with the EU is now a prerequisite for a free trade agreement between the UK and the US. However, the new tone in the White House is just another variable and not the all-important game changer. Ultimately, what matters is what the negotiators and other government officials on both sides say. The complaints from Brussels about the lack of movement in London have recently become louder again. It is therefore not expected that there will be a convergence this week as previously hoped. Instead, the talks will probably be extended again. If you look at the development of the pound exchange rate, since September the markets have been more confident that there will be a free trade agreement. The trend over this period is positive. Should the negotiations fail, the disappointment would be great. Individual investment strategists then expect the pound to collapse by 10%. The upside, however, is limited. Even in the event of an agreement with the European Union, the exit from the internal market will curb growth from January because it brings new trade barriers and costs with it, no matter what kind of deal they get. Disruptions in the supply chains are inevitable. The British economy will therefore weaken for the foreseeable future after the double shock from Corona and Brexit. This expectation is also reflected in the stock markets. While the European indices have risen since the beginning of the year, the British FTSE 100 is in the red. And if you now want to know more about Brexit, YouTube has chosen another of my videos right here for you on the end screen, right next to the subscribe button, which I hope you use. I'll see you in my next video. Click and enjoy. Viel Spaß!